Hi there, welcome to Wyckoff Technical Analysis session for Ripple. So basically Ripple is still continue its movements towards the along the downward trading zone. Um, and it has fallen through the green key level of $2.45. So let's dive into both the weekly and daily charts and see what the latest price actions are telling us and where the potential drop would be. If you're new to my sessions, these are the key takeaways you will find. Basically, I'll share the Wyckoff current and coming stages, the key price levels, as well as any breakout timing the price actions are telling us. So in the weekly chart over here, previously we talked about there's a 65% chance for Ripple to come down to show us a sign of weakness. So this yellow key level of $2.05, basically the price has challenged this level back in June this year, passed through lower than this level during March April time, and also that's also the sign of weakness back in early mid-March, and the automatic reaction December last year. So it's a level that has been tested at least 4 times within a 12 months time frame. Currently, the bulls and the bears are still battling within this zone. There is a weak intermediate support at this level, so that's why the price has been there. When we get to the daily chart, we'll see clearer what's going on. But for now, this $2.05 to $2.45 range, it's where like Ripple is trading along. Like in addition to this downward trend that started back in July 21st. So Wyckoff stages, percentages remains more or less the same. I would say this is even more like 70% chance. The upside now is only 30% because for the price to go up back to challenge the purple key level of $3.38, it has to break outside of this downward trend. Not that it hasn't happened. It happened back in June and then broke out for 4 weeks and eventually started this downtrend that broke this uptrend in between. So there are two levels of resistance over here. The first is the ceiling of this downward trend box, and then the second is the bottom edge of the previous uptrend box over here. So further down the timeline, this will disappear. So if it rises and eventually climbs towards this path, that won't become a resistance until later in time, which Ripple has already broken above the purple key level and setting a new all-time high. So that's only if the price tries to come up so quickly that it hits the bottom edge. There may be some resistance when that happens, but if it happens further down the timeline, then we don't have to worry about that particular box anymore. And here, while these Wyckoff percentages, stages and percentages remains more or less favoring the downside, the Bollinger Band Keltner squeeze is showing us a potential beginning of squeeze going on. So previously when the squeeze happened, it swayed up a little, and then now it's going back to where it started to swing. And when this finishes near the sign of weakness, there may be a rebound from the bottom edge of the downtrend box, and also coincidentally, it's somewhere near the yellow key level of $2.05. So it can happen in such a way in like next week or the week after that the price comes down and show us another sign of weakness that we already talked about, and then bounces off from both the bottom edge and the yellow key level at the same time. And this time it may find resistance at the green key level of $2.45. It can do some horizontal trading before it reaches a potential time point near early February next year, but it's still like too far ahead, so we don't have to worry about that for the time being. because it can go towards the lower levels along this downtrend after the sign of weakness, even before that February time point. So that's the big picture. Now let's get to the daily chart and see what's going on in detail. So in previous session we already talked about it's 65% chance for the price to come down to show us a selling climax. So we had one back in June on the 5th, and then another one back in beginning of April, around April the 8th. Now the third time it is coming during this year. So last time when the price came up to this level, December last year, those were the two low points. Oh, there was a test over here around end June, but that's okay. So 3 low points that kind of touches and passes through within this half a year from April to now, and now it remains the same. That's where the another 13% from the current level. So counting from the current price, this line over here, to the yellow key level, that's around 12.5%. But then clearly since 3 days ago, the price has fallen below the green key level of 2.45 without any signs of being able to recover that level. So it is a bigger range, around 16%, if the price continues to trade sideways along these two bands without touching the bottom and the ceiling of the downward trend. So I shared in many previous sessions how to make use of these trend boxes combined with Wyckoff. We know the Wyckoff stages are coming. Let's remove this one to make this chart less busy. We know the Wyckoff stages, but then we need some boundaries, right? So that's how these boxes helps to indicate us, because the way price movement happens is that they normally it bounces off from the two edges, and there's also one more line. Now it's heading towards this side. So that's the usual maneuver. Imagine it's like a air hockey table. That's how the puck moves, right? So there's also a line, a center line, like the upward trend box over here, that I usually draw. Let's borrow this line and apply this to the downward trend box as well. So this, while we call it the center line, it doesn't cut the box exactly in half. The way we draw this line is to look at the most frequent happening of heads and tails among those candlesticks. That's where the line should go. When you find a lot of heads and tails and wicks concentrating around that level, it applies to like either upward, downward, or even horizontal trading zones. It doesn't matter. So you see the price bounces from that area as well. So not just the ceiling and the bottom, but the center line have its effect. So for bounces like this, you would expect there is going to be rejection from that point. Let me enlarge this a little. If you're watching on a mobile phone, probably that's not very clear. That's what I'm talking about. Yeah, you may enter at this point, but then where do you set the stop loss, right? So if you keep pushing your stop loss, that's fine. Eventually these events will help you realize your profit. But then from a psychological perspective, we have prepared ourselves that it's normal to see a rebound at the center line, much like what happened here. So it's normal for like events like this happening, seeing rebound from also the center line, in addition to the top and bottom edges. So here we may be going through a preliminary support period. That's another low point LPSY that happened. I think I have adjusted, the downward probability to 70%. So let's align these over here. This is after this, so let's make it simple. If this hasn't happened, that won't happen. Okay, let's see whether I have missed anything. If it really comes down to selling climax, you can expect what's after is the automatic rally. So remember that's after the selling climax. You see it over here in April, automatic rally, and also back in June. After the dip, there will be a rebound, but then there can be lower tests to come after the selling climax. So if the price really comes down to show us a selling climax and show us some form of automatic rally, don't get overexcited that thinking the price will shoot and break above this downward trend. There can be deeper tests as long as the price continues to trade within the downward trend box. So that's how tricky it is. So for Ripple, now it's still not touching the bottom edge of the downward trading zone. So that's like another 13 to 16%. So be careful if you are buying the dip at the current level. Remember to have your best friend ready. Okay? Safe trading. See you in the next session.